Ladies and gentlemen, K Kim here with the Traders Club. Welcome to the market update. Today's Friday. I am recording this midday. Market should be open another 3 hours as I record this video, so keep that in mind. I am recording this intraday. Should be seeing some flashing lights on your left. Let's continue with our weekly analysis. Let's start with the spider, the IMNQs, the Russell, the banks, and the semis. Let's look at the S&P here. As we've been anticipating that the market seen about 1 month, right, entirety of month of August of consolidation, right, and then we gapped up here like that, and there was a gap down. We actually gapped above it, made this into an island bottom. Entirety of August consolidation, all this up and down shenanigan, right? All this up and down shenanigan, all these up and down commotions, all these market crash talks and everything just got wiped out, and we're back at new all-time highs here. So I think at this point, bears are pretty dumbfounded. I think they're pretty much got dumbfounded pretty much all year long. After 20% decline in late December in 2018 last year, I don't think anybody believed that we're going to see all-time high anytime soon, but it actually got up to new all-time highs in just about, late April. This was the fastest reversal ever recorded in history, especially after 20% decline we saw in late December. But anyway, ever since then, we did see some pullbacks and stuff, which is very minor, right? Despite how everybody likes to always freak out and emotionally react every time there's a pullback. But I've been saying that these pullbacks are going to give us an opportunity to accumulate more. Well, today the dividend was paid on Spider, so that's what you're seeing. Looks like it's going to be gapped down, but currently as I do my video, record this video, we're pretty much flat there, 0.04% on Spider. But if you look at the year-to-date numbers, you can see S&P is up 20% year-to-date, Nasdaq 25%. You can see how the banks caught up. Banks caught up with the S&P 500. It's up 19% year-to-date. I think the Russell and the banks were like 12, 13, while the S&P was close to 20. But you can see how fast that happened there. And something that I think, if you've been following my video, something that I've been talking about, how the Russell and the banks are going to do catch up, and they're getting the banks already caught up very close there, but the Russell just a little bit delaying, but the Dow and the Russell just lagging there. The semi monster about 40% year to date. But anyhow, so we're just kind of flirting with that rising pivot, right? And we also talked about that this is not a triple top, right? I think you're probably going to see a lot of people drawing something like this, and you're probably going to see a lot of people drawing something stupid like that, right? So every time when you see some stupid chart like this, you can go ahead and tell them that chart is stupid, because that never worked ever. That's not how it's going to play out. I think what's going to play out is, though, we might come back. We got the 20 MA right here and 50 there. You know, we may come down, retest at 20, because 20 has been really acting as support in here, looking at things more of a short-term aspect. You can see 20 here, 20 there. So we may come down, hit that, get right back up, or we may continue lower and retest, kind of revisit that gap area. And I feel like that might be coming next week. If not, either way is fine for me, actually. If we bounce from here, go higher, great. If it comes back, go back there, either way is fine. But there's a good chance I think we may come there. If we do come down there and then maybe retest that 50 MA right there, coinciding with that gap area. And I can do a little bit of fib too, if you're going to see kind of a short-term retracement levels. So you can see fib doesn't even get up here, right? So we got that gap area, we got that 50 MA area. Fib actually comes, the first level of fib is the level where that gap happened, so where that island reversal actually happened. So I think the worst case, I'm talking about the worst case scenario, right? This thing kind of do that and then pull back and start to fill some of that gap, maybe come to 295 before going back up. I think that would be the worst case scenario, but I think there's a good chance we find support at 298 or even 296, worst case 295. So I think anywhere at this level, we might be finding support and then retesting that pivot. I think sooner or later we're gonna break out of that, and then you guys know that my target is 320 by the year end, and I had that target pretty much the entirety of this year, early part of this year. But I think some of these levels also, as this market goes higher, could provide us some kind of a resistance before getting back up. Let's go to Qs. Qs, similar story here. Qs actually fill this gap, fill that gap. You can see that lower wick there, and so you actually filled it. But I still want to put that there. Let's get rid of that green box because they're no longer island, or no longer, actual island there because the gap has been filled with that wick. So it's been consolidating, right? Something like that. But either way, we got 20 MA right here. So either we bounce from here, break out of that potentially as some sort of pennant pattern, or we break lower, retest the 50 MA. Or 188. So I'm still gonna stick with the 190 and 188 as a level to watch, potentially bounce back up. I think this time around when this thing bounces, we're gonna go for breaking new all-time high, right? I know what you're gonna hear from different people, maybe bears. They're gonna say, well, last time when you made an all-time high, we saw this. Well, last time we made all-time high, we saw that. So they're gonna actually expect that when we see all-time high, we're gonna see something like that. It's probably not gonna happen this time. We may see like a minimal pullback just to retest it. I think that's gonna kind of get you to think that we're gonna see these big pullbacks. I think at that point, I already even know what these quote-unquote YouTube gurus gonna say. And you might be kind of wondering, well, okay, aren't you kind of a YouTube guru? I don't really consider myself a YouTube guru. I'm a trader. Right, I'm a trader, I'm a business owner, I'm an entrepreneur, and also I call myself more of an analyst, technical analyst, because I analyze the market, and that's what I do for my members. But there are just so many people out there always calling stupid things. Like, I think when it comes to like trying to when it comes to bears, right? I think what happens is most people are still scared about what happened late last year. You know what I mean? They're scared about that because how fast that decline was. It only took about a quarter, about 3 months, right? Yeah, it only took about 3 months to see that 20% decline, and we saw how fast the market moved up here. Nasdaq was crazy. It just made a new all-time high. It just went straight up and created a new all-time high, right? And then every time we seen that, you're gonna see these new all-time highs, and you see these pullbacks. And so I think most people are going to believe that's what's going to be. You might even hear some of these other YouTube gurus are going to say something like that. I think there might be a minimal pullback, but I don't think it's going to happen because I think those 2 times happen so that it's going to prevent most people kind of jump in. And this time around, we might finally get the run up. So when we get up and we're going to start to see a pullback, minimal pullback, and at that point, I think a lot of people are going to start shorting again to thinking that we're going to see this kind of a decline, but I don't think it's going to happen this time. I think this time we're going to get back and we're going to start to make its run to the upside. But for now, in the short term of things, well, we got the 20 here, got the 50 here, got a 190, 188 as the potential level support there. Let's go to Diamond. Same thing here. We got that gap still open. This kind of became, that consolidating base pattern there. That's a nice base, and I love these bases because I actually think these tight consolidations it actually established a more firm higher low. V-shaped reversal is actually kind of vulnerable. I actually like seeing these bases like that. We have them in the Qs as well. That's why I marked it with that purple box. Same thing with the S&P. That's one of the main reasons why I don't think this time around, because a lot of people think that, well, we made new highs, tanked. We made new highs, tanked. I don't think this time around we're not gonna make new highs and tank. I think we're gonna pull back though. I don't know how much, but not tank. I think we're gonna pull back, and then we're gonna make this run. I think mostly is because of this solid foundation of that higher low that we built in August. Because of that, I think there's a more stabilized move came out of it. So I don't think we're going to get up and just pull back. You know what I mean? But I think a lot of shorts are going to look for that. That we made new high, pull back, made new high, pull back, sharp decline. I don't think this time around we're going to have a sharp pullback. Not like, 6%. Because I think these were what? This was like 8%, right? Close to 8%. This was like close to 7%, right? 7, 8. I don't think we're going to have 7 and 8% declines on the next all-time high. Worst case, maybe 4, 5, like 4, I don't know, maybe 5, but 4, 3, 2, 3, 4%, right? We get up and then maybe 2, 3, 4%, and then maybe we do some consolidation or something, and then we maybe get up, and then we make that run. I think that's kind of what I'm looking for there. Russell 2000 is where is that? So that's kind of what we're doing here. Prior resistance, potentially new support, but never trust these. That's a lot of people might that's textbook says a bull flag. I don't ever trust that. I mean, this is not the setup that I do. Like, okay, I want to go long there, place my stuff there. It's stupid. Trust me, because it's gonna go either way. You may pull back, come down, retest some of these level. You know what I'm gonna do actually? I'm gonna put a small short-term fibs here, like that, and I want to give you that level too. So you'll be actually, let's pull this up. I think those 3 levels. I'll give you those 3 levels: 153, 151, 150. It's gonna find support in any of those levels, and then we'll go right back up. And with a lot of these gaps, down gaps on the Russell 2000 that has been filled, it's probably next move higher, right? It's gonna go up and fill these gaps. Let's go to the banks. Look at the banks, man. It just got straight up here. Big strength, outperformed the market, getting close to where the S&P was. It was around like 12% or something like that. While the S&P was around close to like 19, but we're getting very close to catching up to the S&P there. So nice base. The gaps are opened, up gaps. So let's zoom out a little bit. So I think we're kind of stuck right here. Let's do this. And so that's kind of what we're doing. I think even I can draw. Yeah, let's do that. So you can see we're now faithfully cultivating these higher lows here, right? And we need to get above 28.95. I think that's important, major. Let's turn that into red. I think that's going to be a major swing high resistance or pivot, that right there. Because I think that was that level, 29 level, is where market attempted to move higher on the financials and just tanked. So that's going to be major pivot high or swing high that bulls want to reclaim. So what we want to see this thing is going back up and then pulling back and then finally cultivating a higher high. It could be a subtle higher high, but higher high. So that's kind of what I'm thinking here. I think it's going to poke its head up, and when the banks do that, we're going to see S&P, Nasdaq, Dow, they all kind of going back up, poking its head up with a new all-time high level. And a lot of people are thinking we're going to see a sharp decline, but we will see decline probably, and then it's going to stop short somewhere and then make its run, right? So I think 29, 20, 70 definitely very, very important pivot. And then once we get that, we get above that, reclaim that, I think that will be a pretty good confirmation that from that point on, that Banks is ready to fly. Let's go Semiconductor, and we'll end the video with that. So that big gap up there, right here. We found support at, we talked about this on the semis. I think a lot of people talked about semis, where semis were breaking down, looked at that as a potentially major topping pattern. That's how the market did crash in 2008. So I think a lot of people are scared about that. The thing about that is in 2008, we had every single indices had similar looking pattern. Well, this time around, only the semis had this pattern, right? And then you can see they came back up to retest the neckline, and then we saw the tankage. If the semis were going to be in a bear market, it was gonna continue to cultivate what? Lower highs and lower lows. We all know the definition of downtrend and uptrend. Yet the bears, even though this thing went straight up, made a new all-time high, they still think it's gonna be somehow big fakey move before this thing coming down. It has never happened that way. Never. Never like that. You know, market doesn't come down like 20-some% decline and makes new all-time high and then just crashes afterwards. No. You know, it has never happened before. But anyhow, some people like to, I think, gamble things. So, you know, maybe they thought it's going to be 1 in a trillion probability. Maybe not trillion, maybe 1 in, I don't know, 100, 1 to 100 odds. And they want to get paid big, you know, watching that big short too many times there. But anyhow, so yeah, so you can see I gave you this level. Remember, I gave you this level like back in what, August, and that's where we found support here in that Fibonacci level. Let's get rid of them now. And we saw that base gapped up. I think Semi is getting ready to make some big move, I have to say. Just looking at my other screens here. It's pretty fascinating how much the semis have moved, you know. Look at that, like if you zoom out. And you think, you know, a lot of people don't think that because you made this kind of move, you cannot possibly go any higher. But if you look at, I want you to look at things in perspective, that really, you know, if you look at this here, from June 2000, Semi is really only up 17% in 20 years. You know, in 20 years, Semi is only up about 17%. Trust me, there's more room to move. You know, nice base. We had a faithfully cultivating higher lows in the primary term, right? We saw pretty nice, decent pullback from here to here. That's about 30% decline. Made a big, you know, recovery very, very fast, and that was 50%. That's crazy, 50%. I remember I was, you know, I bought SOXL, this is triple shares of semis, these lows, and I remember they went up pretty fast there. And then we saw a pretty sharp decline, but hey, these were like I said, these were pretty good levels to accumulate, which I did on the SOXL triple share semiconductor. We're right back at new all-time highs. I think it's getting ready to make another bullish run there. So that's everything for me today. You guys have a wonderful weekend, and good luck trading next week.